Hey traders, welcome back to the channel and welcome to your Forex Forecast. Now, in these videos, what I'm going to do is I'm going to analyze the major currency pairs for you. I'm going to talk to you specifically from a technical perspective. Later on, if you find that that's helpful, then we can branch out and we can look at some of the fundamentals as well. But the purpose of it really is just to highlight the general direction of the market for the week ahead so that you can then incorporate it into your trading. Now, I'm not giving investment advice here or trading advice. I'm not going to say to you, go and buy the Aussie dollar or go and sell the euro dollar or whatever it is. What I'm looking to do in these videos here, which I look to post, every single weekend, is let you know what the general direction is. So then you can go and you can look at the levels that I highlight in this video here, and you can try and incorporate it into your trading, into your strategies. And so at least you have an idea of which way the market is going to go. Then when that aligns with your strategy, you'll find that that gives you a much higher chance of success in your trades because you know which way the general direction of the market is. One of the things that I find a lot of retail traders go wrong with is that they just focus on their trading strategy and they don't really understand, where the currency pair is actually heading, what the value of the currency pair is. And one of the things that I do when I work with my private trading clients is I teach them how to value a currency pair. So how to say, well, this currency is cheap or it's expensive relative to where we think it's going to be in the not too distant future and also in the more distant future, so to speak. So we develop sort of like a 1 week view or a few week view, and then we develop a few month view and we trade within that context. So in these videos right here, I'm going to try and give you the view over the next week or so that it can help you increase your overall win rate, your probability of success with your trading. Okay, so with that being said, let's jump across to the charts and let's now start analyzing the markets. So we'll start by looking at the Aussie dollar. So with the Aussie dollar, and actually with all currency pairs, what I tend to do is I start with the daily to get a longer term perspective on things. I mean, I also personally look at the fundamentals. I won't bring them in here because I don't want to sort of overcomplicate things for you guys and girls. I know that a lot of you start off by looking at the technicals. So I will give you that picture. If, as I said, we then find that you would like to know more about the fundamentals, I'll either incorporate them into these videos here, or I'll do a separate video where I talk about the fundamentals of the markets completely separately, so that you kind of get two different views. Now, I think that to be very successful in the long run, to really increase your win rate, understanding where the markets are going from a fundamental perspective will certainly help you, but that's not to say that that's the only way to trade. Okay, so we are going to look at the technical picture, as I said, because I know that's what most of you will look at, and then we'll go from there. So looking at the technical picture here for the Aussie dollar, we can see that from the daily perspective, so the long-term perspective, the market rejected this resistance area at the 0.6880 or 0.6871. It popped through there. It spent literally just a few days. There was an opportunity there in and of itself. Okay, so when markets come up to major levels like this, you can actually sell immediately, or if the markets, they don't hold above there, then you can look for the first momentum candle beneath that level, being this one over here, to sell into with something like a 2 ATR stop, or even putting your stop above the highs. And going for a one-to-one, and that's a very, very effective trading strategy for those of you that are searching for a bit of a strategy. But in terms of the view of this market, is that this has just literally sold off ever since then. Okay, so the market's just been selling off. It came to a level, so we've got this upward sloping trend line over here. It broke through that level. The next stopping point was this support area over here, which it just completely blasted through. You can see within a day. And then below that, we are now playing with the immediate lows over here. Now, one of the things you're going to notice, if I jump across to the euro dollar and jump across to the pound dollar, so these are all quite correlated currency pairs, they're all showing very similar patterns. Now, from that perspective, I jump back across to the Aussie dollar because that's the one that we're looking to trade for the moment. Make no mistake, I'm very, very bearish on this. I think that any rally in the market is going to be an opportunity to sell, but the market is very oversold at the moment. It's not to say that it won't sell off from here, but I just think that it is going to be met with a little bit of a challenge if it does sell off. So I think that the easier trade is going to be to jump down to a shorter term time frame like this over here and really just kind of monitor this high over here as an opportunity to sell. If it breaks through that level and above, then really focus on this area over here. So this trend line, which was a support trend line, could then act as a resistance as we get up into the 0.6398. So call it the 0.64, a nice round number over there. I think that ultimately these are just opportunities to sell. So I don't want to sell right at the lows over here because we are dealing with a major lows we saw on the daily charts. But at the same time, I don't necessarily want to be a buyer. So really this week is just going to be about patience, particularly with this pair over here, looking for the market to come up to this area over here. When it gets there, then look for the sell. If you've got a strategy where you're looking for confirmation, fantastic. If you're like me, I'd be happy to take an immediate sell from that level and then look for my second entry if the market were to get up to over here, to look for a second entry in and around that level there. If we then move on to the euro dollar, so the euro dollar, let's get across to the daily. If we zoom out right there, we can see that we don't have a similar level as we did on the Aussie dollar that we can say, oh, this is going to bounce from this level here. But we do have a previous level of supports, which could act as a resistance. So if we jump down to the 4-hour chart, it's going to be very much the same thing as we were looking at on the Aussie dollar. So as the market approaches this area over here, I'm going to be looking for a sell opportunity. Now, there's a lot that goes for this, okay? So yes, we don't have the bounce from there, but we do have a strong case for saying that this area here is going to be where we want to sell from. First of all, we've got a big daily level. If we go all the way back to the 5th of October 2023, there was a big level there where the market came down to it and then it rallied from it. And it was a big rally. It wasn't like it hung around at that level. It was met with a lot of buyers at that level. When it came back to here back in November, it meandered around there before it broke down from it. So if the market pulls back to it, it's reasonable to expect that we're going to get another sell opportunity from here. If we then pull in the Fibonacci retracements, we can see that it's above, or it's gone beyond the 38.2, and it actually coincides with the 61.8. So a bit of a golden ratio trade there as well. So this to me looks like a very strong sell area if the market gets up there. I wouldn't look to sell right now from where it is at the moment. It's not to say that it won't sell off. It probably will. But as traders, we're looking for the highest probability trades. And the highest probability trade here for me is the one represented by a confluence of levels over here. Big level, nice Fibonacci retracement area as well. We've got also intra levels as well. So not only do we have the big daily level, but we can see that from a 4-hour perspective, the market has interacted with this area a good few times. So I think that is a very good opportunity if the market gets back there. Moving on to the pound dollar. So the pound dollar, or cable, as some of you may know it as, is about to, it hasn't completely reacted to this low here, but it is in that vicinity. So there's a few things that we can do with this trade. If the trade does get down to these lows here, you could take an initial buy from that level. The way that you would do it is you would jump down to maybe the 4-hour chart. So this over here, you'd look at the ATR, you'd put an immediate buy at that level. So as it gets to 1.2043, we typically go 2 times the ATR, so about an 86, call it 90 pip stop loss from this area over here, looking for an immediate bounce up. It's not a complete trend change, but it is a bounce up. So you'd be looking to have your stop somewhere in at around, and again, this isn't trading advice. It's just a strategy that you can look into. It's a very successful strategy where you take immediate bounces from very strong levels. And as the market's got there, we can see if we get a bounce from that level there, it doesn't have to be a trend change. It just needs to be a very minor bounce, and you'll be able to take profits on that trade. Now, once we've got that, then we're going to be looking at the same thing as you had on the euro dollar and with the Aussie dollar, and that we're looking to sell rallies in this. It's quite clear that for the next few months at least, the US dollar is going to be the strong currency of all of the currencies. I looked at my currency scorecard at the weekend, and really it is looking bleak for everything other than the dollar. And even if things in the world aren't so great, then you'll find that the US dollar will strengthen anyway because it's a bit of a safe haven currency, right? So from that perspective, I think the US dollar is going to be one of the stronger currencies, at least for the first quarter of 2025. So I'm going to be looking for any bounces up. I'll be looking for previous levels of support to act as resistance, areas where I can sell the market. So looking at this one here in the pound dollar, if the market were to pull back a little bit, I would either look to take, let's say, for example, we have a bit of a price pattern. So you could have something like that. We don't have this in yet, but if the market were to react here to bounce away, then you could have a breakdown of a trend line. But the one, my preferred way of trading is to look for the immediate bounce from the level. So I'd be looking for the market to come in up towards the 1.2482, and that's where I become a seller. I wouldn't look for much confirmation over there. As long as it's not like a massive momentum move into that level. But if the market, sticks to this sort of price action over here, so this nice harmonic price action, then as it gets up into that level, I would look to become a seller. Moving on to the New Zealand dollar. So the New Zealand dollar, again, let's zoom out. Let's start with the big view. And we can see that if I just pull this down a little bit, we've got a big level of support over here at the 0.5773. And this is a very, very big level. Again, we're looking for reactions to levels, and we can see that there was a big reaction to this level here. It came down to it, and then it rallied from 5775 all the way up to 6369, which it doesn't sound like a lot, but for this particular pair, that is a bit of a way to go. It's now completely sold off from there. It's trading below it, but I do think that ultimately, this is going to be one of the pairs that are going to be, very weak throughout the beginning part of this year. I've already said that the US dollar is one of the ones fundamentally we feel is going to be strong. It just so happens that the Kiwi, the New Zealand dollar, is one of the currencies that we think are going to be weak. So looking for selling opportunities on any rally here. So a rally up into 0.5774 represents a good opportunity. You may look at this move and say that, well, going from swing high to swing low is, oops, that's not what I'm looking for there. Going from swing high to swing low, we haven't had much of a pullback. Okay, so why do I keep getting rid of that? Apologies. Give me a second. I like to see the market pull back to 38, so we might want to see it go back to that area over there if we were trading on the daily. But if we jump down to a 4-hour, you're going to find it easier to find more sort of like, shorter term swings where we could say, well, this initial level over here actually would be valid. So if we go from this swing high to swing low over there, we can see that in actual fact, that's the 618. So that's another golden ratio trade over there. Now, of course, the way that you could trade it is you can put an initial entry in as the market gets here, and then a protective entry in just above there. If it were to break through that level, that's a way that myself and my traders trade a lot. So we don't just look to have one entry and say, well, that's the be all and end all. We get into certain trades saying, well, there is a potential that it goes against us initially. So if it does go against us initially, we're not going to immediately close that position, but actually we'll maintain a second entry a little bit higher up to be able to mitigate some of that risk. So we get the benefit of dipping a toe into the market if it were to react to that initial level. But if it doesn't, if it just smashes through it, then we've got the sort of like the conservative entry just up above there. So that's a way that you can trade. Myself and my traders trade like that. A lot of people in the professional trading world I know trade like that as well. So that's something that you could think about incorporating into your overall trading approach. Looking at the dollar CAD, so the dollar CAD is breaking through a resistance area over here, okay? But we need to look at where is it that we can buy from, because typically I don't like buying through highs. We talked about valuing currency pairs earlier, and this to me is a completely overvalued pair. So I think it's it is due a pullback. Look at this move over here. Now, it may not be tomorrow, it may not be next week, but it is due a pullback. So I'm looking for areas where I can become a buyer from. And I'm thinking that initially, we look at this on the 4-hour chart. If the market gets back to the 1.4279, that's provided support not once, but twice already this month. If it gets beyond that level, then the next level I'm looking to become a buyer from is from the 1.4178, which is this previous area of resistance, which comes support. And then if the market gets even beyond that, then you've got the very, very big level, which is, this one is almost certainly going to hold, unless, of course, the fundamentals have completely changed, but at the 1.3949. So that's where you would look to become a buyer if both of these levels don't hold. But I think that if these levels don't hold and the market gets down there, then we might have to reassess what the fundamentals are, what the sentiment of the market is at that particular moment in time. Because looking at where we are right now, I think that, ultimately a drop towards 1.4283, good opportunity, and then a further one below at 1.4179 down here. And I think it's a fantastic buying opportunity, but we would need to assess what else is going on in the market that caused such a sell-off in this pair. If we then look at the dollar franc, so the dollar franc is one that I think is going to be very, very strong this year. When we talk about where is it going to be in the next 3 months, the next 6 months, the next year, I think we're going to be above 9.2 and potentially pushing parity towards the end of the year. So from that perspective, I'm a buyer of the dollar franc. However, we are at a very strong level of resistance. So what we need to do is we need to trade the immediate picture in front of us, which is to say an initial sell from this level here with a 2 ATR stop would make sense. If we look at that here, that's 60 pips. So a 2 ATR stop will be 120 pips from this level here, which puts us up at roughly that area there. And then look, we only need a very, very small reaction to this level and we'll be able to take profits. And we're not even looking for a big bout of profit taking over here. We're just looking for a very, very small reaction to a larger level, which is going to, which I won't say almost always happens, but they happen very, very frequently. This is one of my favorite trades, big or small reactions to big, big levels. Then we've got to start looking for, well, where do we become a buyer from? Because this market ultimately is going up. From a daily perspective, you would say that you could look at the 0.9049 as being an area where you want to look at buying. And then below that, you would potentially look at somewhere around the 0.8955. So both of these areas over here, if we were to get a sell-off, is where I would look to buy the market. I think the dollar at the moment, even though I think it's going to be strong, going into the next few months, it is something that has been overbought. So I think that there is going to be some profit taking in the dollar, which will give us an opportunity to see the market sell off a little bit. And then when it gets down to these areas here, so 0.9051 or 100 pips below there, that's where you really need to start considering becoming a buyer in the markets. Then our final currency pair is this one here in the dollar yen. So looking at this one here, sorry, I've got something in my throat there. So looking at the dollar yen here, we've got a big level of resistance. So this resistance back here on the 10th of November is no doubt going to come into play at some point in time. This currency pair does have a tendency to have some big swings. So I think that, looking at this over here, the dollar is going to be stronger. The Bank of Japan haven't done anything really to say that they're going to change the interest rate differential between the dollar or between the US and Japan. So from that perspective, the yen will still remain a funding currency when it comes to investing in the carry trade. And the dollar is one that has a relatively high interest rate at the moment, plus it's got stronger fundamentals behind it, plus Trump is coming into power, which is going to have a positive impact on the currency, at least in the short term. So from that perspective, I think that we're looking for dip buying opportunities in this. I think that this is a strong level over here. So around the 15202, or 15189, that is a very, very strong level to be looking for a buying opportunity. You could get in and start buying the market right now if you're a momentum-based trader. But if you're somebody that wants to take a more laid-back approach, then one of the strategies that I recommend is just highlighting big levels in the market, putting in your orders at these levels. So like this one over here, walking away and then coming back, checking it tomorrow, checking it the day after, see if it's triggered, see if anything has changed, but really just have a bit of a hands-free, a set and forget way to trading the markets, because what that does is it removes a lot of the psychological barriers that a lot of traders face, because a lot of traders, they can identify opportunities in the markets. They can identify where the stop loss should be, where their entry should be, where their take profits should be. But where they fall foul is they can't manage their trades. Okay, so they can't get into a trade and follow their trading plan. So if you can have a set and forget trading approach, which trading this way really is, you identify a big level, you put in the order, stop loss, I use the 2 ATR stop loss, have a 1-to-1 profit target, and you'll see that you'll have you're not going to have a 90% or 100% strike rate or anything like that, but on a 1-to-1 basis, you don't really need it. You should be able to achieve somewhere between a 65 and a 75% strike rate trading that particular approach, particularly if you follow what it is I'm doing in these videos over here, and you'll find that that will be enough to get you to the point where you're a profitable trader. You can then parlay that into trading for a prop firm or trading your savings or whatever it is that you want to do. But that's the sort of approach that I'd recommend that everybody, if you're starting out, if you're advanced or you've been doing this for a while but you're struggling, that is a very, very effective way of trading the markets. Okay, so this video has gone on for quite some time. In fact, it's gone on a lot longer than I thought it was going to go. So hopefully a lot of you are still here. If you are still here and you haven't subscribed to the channel and you liked this video and you'd like to see more of them, please make sure that you are subscribed to the channel. You hit the bell so that you get a notification as and when I upload these videos, and then post in the comment section what types of videos you'd like to see. If you'd like to see anything about fundamentals, more analysis, then I will endeavor to put that out for you. Okay, so I'm here to help you move forward with your trading. I've been doing this for the past 20 years, and that's trading and investing in the financial market. So I think there's a few things I'll be able to pass across to you. But yeah, thank you so much for watching this video, and I look forward to catching you in the very next one. Take care now.